And as I'm clicking through here, I can't pull up her bio. I just had it. Now all my screens are frozen. So unfortunately, I'm sorry, Amber. Please tell us a little about yourself.
I will.
And so this, if I remember correctly, we are going to do preparing for the tax season for business owners, for business filers, and then preparing for the tax season for individual filers. And then Amber, the tax lady, is going to give us a Q&A. And so I'm going to turn it over to her right now before I mess something up. And so thank you for joining us, Ms. Whitehead. Please tell us about yourself.
All right. Well, thank you everyone for taking the time out today to talk about taxes, like everyone's favorite subject, right? No. But I am Amber, the tax lady of Whitehead Tax and Financial Services, LLC, where my mission is to teach you, the entrepreneur, how to maximize your tax deductions in order to create the lowest tax liability out there legally, of course. I just want to say first that I'm honored to be here. Thank you, Net, for providing this platform. You have done such an amazing job with this platform. I mean, I've seen it when it just started off as a little group and now it's into this big thing now. You had this vision where you wanted to inspire people that were affected with this pandemic, where you gave people resources to find coaches, how to write a better resume, and just the list of guest speakers that you have had to provide knowledge to everyone, I'm quite sure has been very inspirational to many, and you have given a lot of people hope. So I'm just honored that I can just come on and be a part of this as well and share some of my knowledge with you all. So let's kind of rewind a little bit. Let's go back 15 years. And I'm going to talk to my younger self. And I'm going to tell you, my younger self will probably laugh at me if I tell her that you're going to have your own business to the point where you're going to almost be able to make this a full-time thing. My younger self would have laughed at me, right? Like, nah, because I never, ever had the intentions of starting a business. Never. I went to school for accounting. I wanted to be a CPA, work with a CPA firm, become a partner. And that's how I wanted to live my life. Tunnel vision, couldn't tell me nothing. I had people that told me I should start my own business, but I was like, nah, I ain't doing that. But I come from a spiritual perspective, so I apologize in advance if I offend anyone, but that's all I know how to speak about. But I'll tell you this, when there's a purpose or a gift over your life, you'll get pushed to it one way or another. And just like how the pandemic happened in 2020, the housing crisis happened in 2008, where everybody was pretty much unemployed, including myself. I suffered 2.5 years of unemployment. That is when I had my aha moment of there's no such thing as job security. So I decided I never want to put myself in a position again where someone could take away my livelihood, right? Because at the end of the day, if you are only relying on that one source of income, you are in a state of emergency. Yes, there's unemployment. I'm from Connecticut. We get 6 months. I know there's some states down south that only gets 3 months. What happens? You run through your 401k, you run through your savings, and what do you have? So I'm here to, encourage someone out there that go ahead, get that rental property. If you're a first-time homeowner, go out and buy a rental property so that way you become the landlord and someone can pay your mortgage and you can invest that in something else, or start building your emergency fund. Invest in the stock market or start a home-based business. Do not rely on one source of income. Yes, if you do venture out into becoming self-employed or you want to start a business, be patient with yourself. I'm going into my 9th year now as a tax professional. Yeah, if you look at my website now, it's real fancy. But if you look at my humble beginnings, I didn't have any of that. My booking site was my website page. I had my brother design my logo for me. So everything was I don't want to say low budget, but it was cost effective for me to at least look professional in what I was doing. So you don't need a whole lot of money to start a business, right? So if you're on the fence and you're like, oh no, I'm not ready, I'm waiting to get this lump sum of money, or I'm waiting for this to happen, there's never a right time. And if you're anything, like I said, gotta push you out. Many of you are probably still unemployed, and maybe that's your answer that God is saying, go do what you need to do. Start that business. All right. So I didn't want to get into the whole, being a motivational speaker, because I know this is, strictly just trying to help you all get prepared for tax time. But sometimes I have to speak where I'm led. And I just hope maybe that touched somebody out there tonight. All right. So what do? I am an IRS enrolled agent. What does that mean? I know a lot of people hear CPAs because that's what they're most familiar with. But an IRS enrolled agent is, the IRS gives us the highest credential to tax professionals. We got to pass an exam. We got to maintain our continuing ed credits in order to maintain a license. I would say the biggest difference between a CPA and EA, and I'm not to say, one is better than the other, because I'm not here for that. But the biggest difference is a CPA has to have education. You have to have a bachelor's, a master's, then you have to have a little bit of work experience before you can even sit for the exam. Then you got to pass a 3-part exam and then take continuing education credits, right? So that's the biggest difference. But all CPAs are not the same, because they can specialize only in accounting, only in tax, only in auditing, just like an enrolled agent can only specialize in tax prep and or representation with helping people resolve tax debt or audits, right? Myself, I do both. I do tax preparation as well as manage audits and tax resolution. Like I had a client who owed $32,000 to the IRS. We settled for $25, right? Nice. And they were on vacation when I got that message too. So it was really awesome to give them that approval while they were on vacation. Then I had another person come to me. They were under audit for the IRS. They owed like $8,000 to the IRS. I was able to reconstruct everything, and then they only owe $3,000. So that's what I do as far as what tax prep is concerned. My niche is service-based, home-based small business owners who are women minority owned, right? So if you are a consultant, a therapist, a graphic designer, any of those things, I would consider you my ideal client. Okay. I also do individual tax preparation as well. Isn't that funny? You better come to me, girl. I do individuals, if you have rental properties and things of that nature. Okay. So, but my background, I'm kind of like a one-stop shop, because when I graduated from college, I went straight to becoming an auditor for a CPA firm. So I have that audit mentality, have accounting degree. I currently work as an accountant at UConn, as well as I do taxes. So kind of have everything going on, right? So enough about me. Let's kind of just get into what we're here for and how an individual and or small business owner can prepare for tax time. One thing that I want to make clear is that we all have this misconception of tax time. We all think, oh, tax time is, yeah, I'm about to get that refund, that $7,000 refund, whatever the case may be, and spend it however you want to spend it. But truly, the only people that should be looking forward to tax time are individuals who are low income with up to 3 children. Why? Because they qualify for the earned income credit. Okay. So at the end of the day, if you are middle class and you're earning over $50,000 and you are still getting back a $3,000 or more check refund, excluding all credits, solely based on your withholdings, you are cheating yourself throughout the year. Because what is a refund? A refund is an overpayment of your federal taxes to the federal government. That's nothing to be excited about, because you could have had that money all year round, right? So tax time is really just a reconciliation of your taxes. Depending on your income level, you fall in a certain tax bracket. So maybe my tax bracket, I'm supposed to pay $10,000. So when I file my taxes, the IRS wants to see, Amber, did you meet $10,000? Yes, I did. So I owe you nothing, you owe me nothing. I exceeded it a little bit, so I get something back. I didn't match it, then I'll have to pay back, right? That's how it goes. And that is why I know a lot of people are like kind of confused about the new W-4. So if you decided to change your withholdings, or if you wanted to, or if you got a new job, you're faced with a whole new form, right? And that form is structured exactly how I said it is supposed to be structured, to keep you to break even, owe a little, or get a little bit back, right? I don't really like how it's structured, how the form is made, because it kind of got to have your tax return with you in order to fill it out. But it's really not that difficult. That's why if you look at it, there's two different lines on there. And there's a line that says, that asks you how many children are under the age of 17. Multiply that number by 2,000. What does that $2,000 represent? That represents the child tax credit that you get per child under the age of 17, right? So essentially, just say you have two kids that's under the age of 17, you now have a $4,000 credit. Conceptually, that $4,000 you are going to receive in your paycheck throughout the year. Granted, if it's a full year, I mean, it'll chew up once you actually file your return, right? Then the next line is, how many children do you have under the age of 17? Why? Because you only get $500 for them. So that's why it's going to become very important for you to remember, as soon as your child turns the age of 17, to redo your W-4, because if not, then you are having you are getting too much back in your check, which will cause you to end up owing at the end of the year, possibly, okay? So I wouldn't get caught up in knowing if you have like multiple jobs, because I know there's a sheet on there if you have like 2 or more jobs. I really wouldn't get caught up on that unless, you know, one of your jobs is significantly, you know, paying you just as much as the other job. Or if you have a spouse that is a high wage earner, then you can, then it will be necessary to fill that out, because you want to make sure that together, if you file jointly, that there's enough taxes coming out, okay? So that's how the new W-4 works. Conceptually wise, again, it's supposed to put you in a position to break even, again, excluding the majority of your credits, all right? Now, this season is going to be a little tricky for those who are low income with up to 3 children to qualify for the earned income credit. Why? Because the earned income credit is based on earned wages, not unemployment. So if you only work 3 months out of the year, your earned income credit is going to be based on those 3 months. Remember, your unemployment also had that extra $600 coming out. So for those who maybe didn't have any taxes taken out of their unemployment, but legally, I believe, federally, you cannot exceed no more than 10%. So even if you did have taxes taken out, the most they could really take out is roughly like 10%. So if you add that plus the extra $600 and you only work 3 months, you are going to put yourself in a position where if you were getting that $7,000 or however much refund, that ain't happening this year. You'll be lucky if you get anything back, because I foresee a lot of people owing this year or getting their refunds drastically reduced. So I want, you know, for individuals to be prepared for that. You know, do an analysis now where you can kind of forecast where you're going to land when you file your taxes. So that way, there's another stimulus money coming through. You can at least put that money aside to help pay your tax bill. And I'll get more into the new bill towards the end of my presentation. So with small business owners, let me go back to individuals. If you have not did this task before, I highly suggest you do it starting in the new year. One of the things that I find is that people are so rushy to file their tax returns that they forget income. You had so many different jobs throughout the year that you forgot. Oh man, I forgot I worked at JCPenney that one day, for a seasonal job or whatever. Get yourself a notebook the first of the year and write down every single job you had. Write down if you took out retirement money. Write down if your child is in school or you're paying childcare. Write down anything financially that's going to impact you on your taxes. Write it down. So when the year closes, you can check off. Oh yeah, that W-2A come in, W-2B come in. Oh, here's my bank interest statement. That's in. I took money out of my, I cash stocks money out. I got that form. Because if you're anything like me, I can't remember what I did yesterday. And the thing that trips up a lot of people, especially with wage earners, is that sometimes we leave a job at the end of the year. So if you left a job, just say the last week of December of 2019, depending on how that payroll was set up, you could have gotten paid in 2020. So you may have a W-2 for 2020, but it was almost a year ago that you're probably not even thinking about that job. You probably don't even remember because in your mind, you left that job a long time ago. These years are just flying by so fast as everything just.
And they're not about career journey. Yes, I was a former
Wait a minute.
Government professional, but now this is my new career. So I definitely have personal experience.
What happened?
Sorry, Amber. I'm like, I ain't hearing nothing, and I realized I done muted everything.
All right.
That's why I'm like, I see you moving. I'm like, wait a minute.
I'm like, wait, who? I'm like, did somebody ask a question?
I'm doing all kind of stuff, and I'm sorry.
No problem. So what I was saying is, if you left that job at the end of last year, you probably don't remember or even expecting to get a W-2. So that's why it's helpful to get a checklist and write these things out. Another thing you should be aware of, because it's 2020, a lot of people are unemployed, maybe you have made settlement with some of your creditors out there, right? So say you owed a $12,000, not $12,000, a $2,000 credit card bill, and you're like, I can't afford to pay this. Can I give y'all $500? And they're like, okay, yeah, we'll take 500 is better than nothing. So we'll take the $500. But now you're still on the hook for what I said originally, 2,000. So now you're still on the hook for, 11,000. Well, where do I keep getting these numbers from? You're still on the hook for over $1,000, right? That income is still considered. You're still not muted, Nat.
To create inclusive income. So basically, utilizing what you already have.
Wait. Hello, I'm not muted.
No, you're not. Okay, you good now. All right. What was I saying? Oh, so if you made any type of settlements with that, or say you got your car repoed or anything like that, you will be getting a 1099-C, right? And that has to be reported on your tax return. Because why? The IRS looks at that as income to you, because you no longer have to pay that. So now you got to pay taxes on that. All right. But if you can prove that you are insolvent, meaning that you have more liabilities than assets, then you don't have to pay tax on that. So that's the workaround with that one. All right. So don't forget that. Write it down. Retirement money. A lot of people forget. They just think, oh, because the taxes already came out, I don't need to put it on my return. And that's one of the biggest untruths ever. You still have to file that income on your tax return. And you will be, if you did an early withdrawal, you will be subjected to an additional 10% on top of that, except for next year, because in the CARES Act, if you had to take money out for your 401k due to you were affected by, Corona, you don't have to pay that extra 10% on that early withdrawal. So you get it waived, okay? So that's one of the benefits for taking out your retirement money this year, all right? As an individual, there's really not much you can do as far as maximizing your tax return. It's pretty much black and white. If you didn't have enough taxes taken out, then you're gonna owe, right? But there's some deductions and credits that's out there. Like again, if you have a school age, not a school age, a college student, you can claim the college educational credit for that person, for your child. Or if you have little ones that's under the age of 13, you put them in summer camp or after school programs, you're able to get a dependent care credit for that. I always say maximize your 401k contributions because those are pre-tax. So if you ever look at your W-2, you'll see box 1 and box 3 is different. Why? Box 1 is net. Box 3 represents all your gross salary, your benefits and all of that. So the lower we can get box 1, because box 1 is what determines how much tax you pay. So if you maximize your 401k, or if you do have a lot of medical expenses, then you can have HSA contribution through your job. Do all that because that's all pre-tax money, right? I always tell people to do that before they start saying, oh, let me give an extra $25 a paycheck to the IRS because I know I'm going to owe. Wait, let's exhaust all of our pre-tax options first before you give away $25 to the IRS. Because I'd rather for you give that $25 into your 401k than to give it to the IRS, because it's not going to benefit you giving it to the IRS, but it will benefit you more for your retirement, okay? So that's one of the techniques that I use. If you are, again, a wage earner, you should at least be in communication with your tax professional throughout the year, even if you're a business owner too, especially if you're a business owner. You need to have communication with your tax professional all year round. If you do not have that access, you need to fire them ASAP. Because once the year closes, there's nothing we can do for you, right? So don't get mad if you owe money or whatever and stuff like that because you didn't contact us. So what I typically recommend for my clients is in the month of July, if you are a wage earner, let's do a paycheck analysis. Why? Because I have the first 6 months of the year in the bag to forecast what your tax liability may be. And then we had the next 6 months to do damage control. So if I see that you're going to owe a lot of money, then again, I'll revert back to saying, did you maximize these type of expenses? If I feel like you have, then I'll say, okay, yeah, you need to take out an extra $50 out of your check to the IRS to get this balance down. If I see that you're going to get too much money back, and I say, hey, let's change your withholding so now you can get that money back and you break even, right? But if you don't do these things, or you don't do your own analysis or talk to your tax professional, how do you know? How do you know as a business owner if it's time for you to change entity types, right? If you're, progressing in your business and you have a consistent profit, eventually you will want to get out of being on a Schedule C and perhaps become an S Corp or a corporation if needed, right? But if you don't have these conversations, you don't know. We can't do any damage control for you, all right? So those are some of the techniques that I use for individuals. Because again, like I said, it's pretty much black and white. Now for small business owners, some of the things that you should be doing, if you have not been doing it, you need to start doing it next year. Set aside a day every week, whether it be a couple of hours, to look at your numbers. Because you must know your numbers. Because how do you know if you are in the black or if you're bleeding red, meaning you're not profitable? If you don't know your numbers, 90% of small business owners just fail within their first couple of years. Black-owned businesses almost fail almost 100%. Why? Because we don't know our numbers. We see the income coming in like, oh yeah, I made $10,000, whoop, whoop. But then, okay, you made $10,000, but what expenses were needed for you to generate that $10,000? How many hours of admin work did you put in, marketing work? If you do all the math, you may break even or may be at a loss, but you're definitely not going to be at 100% $10,000. Even our own individual accounts. How many of us have these auto subscriptions, auto drafts, right? They come out out of sight, out of mind, right? But if you look at those, I bet you there's at least one auto subscription you have that you don't even use or haven't even used in months. Cancel it. Same thing with being a business owner. If you are not looking at your expenses on a monthly basis, how do you know if your expenses are really giving you return on your investment? You don't. Every expense you have should bring you in money, unless it's a necessary expense that you have to have in order to keep your business functioning, which is still 9 times out of 10, you need to have it to generate that money. But if you're having other services that you're paying for and it's not giving you any money back, cancel it. But you don't know that until you look at your numbers on a monthly basis. Do a profit and loss statement every single month. If you're not in a position to do it because all you care about is just focusing on bringing in the sales, then hire a bookkeeper. So that way they can communicate to you on a monthly basis what needs that, if you're profitable or not. You know, I have a mentor that says his favorite quote, not his favorite quote, but one of the quotes that he says is, making more money does not make you profitable. Because so what that is saying is, just because you're making more money, if you don't know how to manage that money, it's not going to do anything for you, right? Again, for small business owners, I would say some of the things that you should be doing on a regular basis, besides creating your profit and loss statement, get those receipts scanned. Find an app that can scan your receipts, or create a folder in your phone where you can take your own pictures. Or now when you go to the checkout, 9 times out of 10, they say, do you want us to email your receipt? Say yes. And then you go home, create little folders, create a little Staples folder in your email, set rules for it. So that time, every time a Staples email comes through, it'll go straight into that folder. If you're not a papers, I'm not a papers person. I try to be as paperless as possible, right? But why is it important to have a scanned receipt for business owners? Because what happens after a couple of months with that receipt? You can't even read it. The ink is faded. No good. IRS can come back and audit you 3 years, and if they find something fraudulent, they can even go back even further. So what happens if you have a major purchase on a receipt and they can't read it? Bank statements in itself is not enough, because what does bank statement say? It only says the vendor. Everybody knows Staples, you can go to Staples for personal as well as business. So if you don't have that receipt to prove if that was a business expense, you may put yourself in a position where that expense will get disallowed. Yeah, they do fade. Especially if you leave them in the dash or whatever, they're going to fade. Or you ball them up, they get all wrinkled. you know? So you need to do that. The other big thing I find is mileage. People are not tracking mileage. You know, IRS requires you to keep documentation of your mileage. Get an app that can auto track it for you. Or if you're not tech savvy, keep a notebook in your car. Write down your odometer. So come January 1st, you need to take a picture of your odometer reading and write it down in a notebook. And then come 12/31 of 2021, you take the odometer reading then. So that way you know how many total miles you drove. And then hopefully you did even further due diligence to distinguish which ones were business versus personal. Because mileage is a big one. You know, home office. People get confused with the home office because it's a big myth. Oh, if I claim my home office, I'm going to get audited. No, it's not true. If you truly have a home office, utilize it. You're missing out on deductions. You don't have to own a home to have a home office. You can live in an apartment and have a home office. It's an area that you have designated exclusively regularly for business. It just can't have any personal, so you can't have your home office as your bedroom unless you're going to section off that bedroom and only claim that area square footage. But if you claim the whole bedroom and it has that bed and you were to get audited, the IRS will say, well, that's not a home office because you have personal things in there. Okay. So those are some of the things that as small business owners, one of the biggest things that I see that are getting missed or that people just like, oh, no, I'm not going to claim home. Like I had one client the other day. She was about to owe $1,000 to the IRS. And I told her, you have a home office? She said, yeah, but I don't want to claim it. I'm like, girl, you better claim it because I can get you from not owing that $1,000. And when I told her that, she's like, okay. She came back, gave me her gave me the square footage, gave me all the utilities and her rent that she was paying, and she ended up getting a refund. So don't leave money on the table, people. Yes, it may take a little bit of work, but at the end of the day, that work is going to benefit you on your taxes. Again, as I said, my goal is to teach you, the entrepreneur, how to maximize your tax deduction in order to create the lowest tax liability out there. If it's $1, I'm claiming it. I'm not giving up $1 to not claim. All right. So what else? Oh, the new stimulus. Let's talk about the new bill. Well, before I even talk about the new bill, let's talk about some of the rumors that I still keep seeing about that you got to pay back the stimulus money. You don't have to pay it back, people. Whatever you heard, you do not have to pay it back. All it is was an advance, right? So when you look at your tax return, the 2020 draft, you'll see a thing called a recovery rebate credit. That is the stimulus credit. You either got it or you didn't have it. So if you didn't get it in 2020, you'll get it in 2021. If you did get it, it wipes it out. So that's all it is. It's just like, it's just an advance that was for 2020, but because for 2021, but because we were in 2020 when all this happened, that's what it's about. Now, the new one that's coming out, it says $600 per adult. So $1,200 if you're married, $600 for children under the age of 17. So if your kid is 17 or in college, they do not qualify for it. It looks like they're going on the same income level as the first round, all the same criteria. What I am hoping is that they do create the option again this year for people to update their information, because people change bank accounts, people move, all the time. And hopefully they have something in place for that. Charitable contributions, before, the only way that you were able to do that if you were if you're able to itemize. And what I mean by that is everyone has a standard deduction. So if you're single, your standard deduction for 2019 was $12,400. So in order for you to truly itemize, you would have to exceed that amount. So that means your mortgage interest, your taxes, charitable contributions, all of that would have to exceed that $12,000. If not, then you're just stuck with your standard deduction. But this year, they're giving everybody $300 above the line, so you don't have to itemize, as long as you have receipts to prove that, you know, you've given away $300, whether it's to the church or, you know, some of these, you know, cancer foundations and things of that nature. You'll be able to claim that. All right. You will be getting an extra 10 weeks of unemployment, which will come with the $300. So that will be happening effectively, I believe, December 26th. But don't expect to see that $300 immediately, because again, the states still have to go through their own process to change their systems up or whatever. So I think you probably will start seeing that $300 depending on how fast your state works, maybe about probably like the second or third week of January, if not sooner. Maybe now things are clicking and all of these kinks that happened earlier in the year when all this stuff happened, they've got it all straightened out. I don't know. But so that's pretty much what's new with the stimulus. Small business owners. Let me say this before I say my final point. All this grant money that you've been getting is taxable. All right. So yeah, it was free money, but you got to pay taxes on it. So you got to remember all these grants that were given to you. There was tons of them. I know Lowe's, Citizens, PayPal, the SBA, you know, there was tons of them. There were tons for even, you know, even photographers, you know, minorities, women. So if you got approved for a lot of them, just know that you have to claim that on your taxes. If you are a business owner, it will go on your Schedule C as other income. So that way you are able to write off the expenses that you used for that money. If by chance you really didn't have a business, but you still got your grant money some kind of way, it will go as other income on your regular 1040, not the Schedule C. So either way, it's nice that we have gotten that money, but we still got to pay tax on it. As far as the payroll protection program, the PPP loan, if that money was forgiven, you cannot claim any expenses that was used with that money. Why? Because it's like you're double dipping, right? So if they say, hey, you don't have to pay that $50,000 back, but yet you're still trying to claim the expenses that you used when you got that $50,000, you're double dipping. And they're like, nah, we ain't going for that. So is it better to not have it forgiven so you could use so you could write off those expenses? No. Because, for example, if you got $50,000 in PPP, whether you use to pay yourself, your employees, or whatever, if you decided that, oh, no, I want the tax deduction, and you use the full 50, depending on whatever tax bracket you fall into, I'll just say 10%, you're only going to get $5,000 tax deduction of that $50,000. So it's not dollar for dollar, people, right? To pay tax on that $50,000 is roughly like $7,700. So do I want to pay tax on $7,700 or do I want to pay $50,000 back? It's a no-brainer. I'd rather not pay $50,000. I'll pay that $8,000, right? So that's how that works. And I kind of just want to make that clear because I know there's a lot of confusion around that as well. So just be aware. If you are keeping track of your grant money and you know exactly how much, then you can go ahead and you can file your return as normal. But if you forgot on who gave you what money, you better wait till you get all your 1099s in, because again, you do not want to get a nice little love letter from the IRS saying, hey, you forgot to report this. And then you end up getting taxed on, you get penalized for underreporting, you get penalized for, you know, the interest and the amount due. It's not worth it. Okay. Individuals, for head of household status, please know that your tax professional is probably going to be asking you a lot of intrusive questions or wanting to see documentation. They're going to want to have your child's birth certificate, see the school records, see medical records and all this, because why? We're getting scrutinized more for making sure that we truly are saying that this person has had a household. All right. Even myself, I got to switch up things because we get fined and it's not worth it. All right. So be nice. They say, I want to see this. You just give it to them. Well, nobody else ever asked me for this. Well, they asking for it now. And if they don't ask you, then you got to kind of be wary about who you're dealing with. And that leads to one of my final points for tonight, because I don't want to hold y'all up much longer, is that how do you pick a tax professional, right? So you can go to VITA, which is a voluntary income tax association, where you can go if you're low income, you can get your taxes done for free. You could do it yourself. But if you are deciding to pay money to somebody, I highly suggest that you stick with one person. You know, all these commercial firms are great, but you're not guaranteed to see that person every single year. And with so much fraudulent activity with tax professionals, which unfortunately is giving us bad names, you need to make sure that that person you're dealing with is someone consistent, because why? They have your information, they have your social, they have your bank account, they have your address, they have your spouse information, if you're married, your kids, all that information. Why do you want Sam one year to have it, next year Nicole has it, the following year Joe has it? Because if anything goes wrong, if you get hacked, identity theft, you don't know who to point to. But if you've been going to sue for the past 12 years, then you kind of think that's it, sue, right? For small business owners, it's very, very, very important that you deal with someone who knows your industry inside and out, right? It's no different when you go to your primary care physician for your annual checkups. But the minute you say, oh, my heart, they're going to refer you to a cardiologist. Why? Because that person knows the heart inside and out. So why would you go to a tax professional that doesn't know your industry? Real estate is a big one. I don't touch real estate except for rental properties. But investors, there's too many credits, deductions, loopholes, scenarios for real estate that you need someone who is versed in that area. Because if I say I'm still going to serve you and I don't know, I'm doing you a disservice. So find someone who knows your industry and can help you maximize your tax deductions, right? So that's what I wanted to say. Make sure, they're qualified, get referrals, go to their websites, follow them on social media, whatever you have to do, so that way you can feel comfortable giving somebody the most sensitive information. All right. When you meet with clients, you find that there is less financial knowledge among managers. Well, now I do find minorities are less knowledgeable in financial literacy, just in general, right? But that's across the board for everybody, because no one teaches financial literacy. I went through high school. I mean, I didn't learn how to do a budget. I didn't learn about taxes. I didn't learn about credit cards and all of that stuff. But when I got into college, I got swamped with credit card offers all over the place, right? And I made very bad decisions because I didn't know any better. But we as a people, we're not taught that. So that's why I try to position myself to, whether you use me or not, I want to give you the information. So you either take it for yourself and pass it along to your tax professional, or you take it for yourself and you do it your own self, So that is why I try to do that. You can identify. I don't really want to say if there's a different group, but I would just definitely say minorities are definitely on the lower spectrum of knowing financial literacy in general. Okay. Well, that is all I have for tonight. Unless there's anybody out there that has any questions for me, you can reach me at whiteheadtax.com. I'm on Facebook. I'm on Instagram as Amber the Tax Lady. My phone number is 860-474-3700. If anybody wants to reach out to me or just reach out to Danette, she has all my contact information. If you have any further questions that you need to get answered. But I hope I was able to shed some light, some value, some motivation for you to succeed next year and going forward. All right, because it's all about creating great habits. Because if you are not in anything in life, if you are not prepared, you can't expect the best results, right? If you don't prepare for an exam, you're probably going to fail the exam. So if you don't take your finances and your taxes seriously, then no one else is going to take you seriously, and then you're going to have to face the consequences of that. All right, now you can come back on.
All right, I'm coming back. I got so much going on here, guys. I can't even lie to you guys. I'm on Clubhouse and I'm doing this. I'm trying to do everything, okay? So I have some comments. So I dropped one of the questions. That question was from Rhonda about the question that I dropped there about minority groups. Okay. And then I have some comments from some business owners. I need to hear this. Thank you, Amber. Gave some great insight. So I'm going to go ahead into my questions.
Okay.
All right. Okay.
Don't make them too hard now.
Yeah. I got my 3 questions. So, so Amber, that I started this group, and we service everyone. We primarily, our mission is to service people from marginalized and BIPOC groups, Black and Indigenous people of color, and to help them increase their representation in the workforce. And increasing representation is not just traditional pay work, that's self-employment too, okay? So I want to ask you, I ask all of our presenters this question. If you just, look back into your background, your history, would you say that you've ever been marginalized? And if so, can you share with us something about that?
Actually, I don't think I have. And maybe it could also be because I was blind to it. Mm-hmm. Because it's one thing to have it like right in your face versus it being undercover. So maybe things have happened to me, undercover that I wasn't aware of. But, all the jobs that I've had, graduating from college or whatever, I felt like, my peers was getting paid the same amount. So I didn't feel any of that. There were other minorities there, so I didn't feel like, they're just putting me in just to fill a quota. So I didn't really have those issues, fortunately.
All right. Well, okay, not a problem. So let me ask you this one. If you could go back into your history and you could tap a younger Amber on her shoulder, what advice would you give her?
To start her business earlier. Right? Because remember I said earlier, it was like, I never wanted to do this. And I had countless people telling me this is what I needed to do. But I couldn't see that vision because that's not where I was at. So I truly know if I would have started in my 20s, like I'm 41 now, if I would have started in my 20s, who knows where I would be right now.
I hear you.
But there's a time and season for everything. So maybe it really wasn't my time then. And now is my time.
All right. And our final question is, if you had to have one takeaway for this evening, what would that be for us? If you want us to walk away with one thing, knowing one thing, what would that be?
The one thing, stop suffering from imposter syndrome. you know,
God.
because so many times we doubt ourselves, and I'm guilty of it, you know, and I'm still guilty of it, because there's times where I would second guess myself and say, Dad, you know, should I really say this, or should I really promote myself even more, because if I do that, I get a different type of audience. Am I ready for that? You know, so you kind of just gotta push through that. You know, if you truly believe God giving you a gift and you're willing to do this, I would say for free, then you know that that's truly your gift and your passion, and we can't not let our own insecurities stop us from doing that.
I hear you. I hear you. All right, Amber, the tax lady, this is your season is about to start, your busy season. So I appreciate you giving us your time as you know you wind down the year and start your new year. You know, I appreciate you. You can come back anytime you'd like. Thank you.
Thank
I
you.
appreciate you.
All righty.
All right.
You keep doing what you're doing too.
I'm gonna try. All right. Bye-bye.
All righty. Bye-bye.